Hey, Andrew Faldy here. In this interview, we're going to talk with Rod Thorne. And what you're going to see, this is a quasi interview as well as a mentoring session. And the reason for that is because Rod's been a part of our community now for a few months, and he's only 1 week into the automated trading program. And so, what you're going to see, he's at the stage now where he's taking ideas and concepts and strategies that he's been using, and he's now putting them to the test to see how much edge is really there with what he has been doing and if there's possibly a better way, a way to improve upon it. All right. So I think you're going to find that very interesting. Also, we go into other strategies and other ideas that he's been learning as part of our community. So I think you'll find this very interesting. So enjoy the interview.
So,
Perfect.
so I'm getting a lot out of being associated with you ever since December when I took your
Yes.
classes there, and then got into the regular group, and then now now the trading the automation group, which is really an amazing representation that you make that it's possible for us to get through this in 28 days. And
Yeah.
you were saying that back in October when we had our first, you gave us a presentation at our San Francisco Bay Area options group meeting. Yeah. So
Yeah.
you've been on my target list for a long time.
Awesome. So how's it going with automation then?
Well, I'm at the end of week one.
Okay.
About a day passed. I started it last a week ago, Friday, I guess it was, and uh, the it's a challenge for me. I'm an engineer.
Mm-hmm.
Uh, I'm an engineering manager actually for decades, and but I'm still a
Mm-hmm.
designer, and so I know something about programming and that sort of thing. I've been I found the homework assignments challenging because they force me to think about what it is I want to do, and of course that's the objective. And even though I can code somewhat, I the one of the assignments to make five code examples and take them through the process. Last night, I got one of them, which was to trade my momentum um, strategy on the S&P, day trading it. Uh, I actually put it through the optimization process, and I thought it was just junk. It was just garbage. I was trading it over the 15 days, first 15 days of February, and
Mm-hmm.
I had to go long only because it was even more garbage if I tried to go both ways. And in long only, it looked poor. So I had no hopes. But I just, as you tell us, just plow ahead and don't get stuck on
Right.
promotion. Get the job done, move on, prototype it quickly, and see what you got, and then move on to the next idea.
Yep.
And so I took it through the optimization, and I couldn't believe it. It suddenly started showing more and more green and less red on the screen. And after about seven, I guess I got it up to eight modifications and tests. I suddenly had the screen mostly green, and I
Mm-hmm.
had it showing a profit, and I had 50-50 wins and losses out of 100 trades in the first 15 days of February. I couldn't believe it. That was actually the process that you gave us was actually working.
Yeah. Yeah. So with that, you just have to look, what did the optimization teach you? Did it show you a very limited number of ways that it becomes profitable, or did it guide you to a different approach and a whole different time frame or anything like that?
Well, to a certain extent, I still regard what I'm doing as hacking because
Mm-hmm.
it's cut and dry, and using the optimization to change some of the parameters. So one of the most important things I've learned from you and also from TradeStation is that the strategies are essentially modules. They're you can run multiple strategies simultaneously.
Mm-hmm.
So if you specialize them and essentially make them subroutines, then I have one now which is how to get me into the market, and
Okay.
then and it also will get me out, but too late. It doesn't take the profit. So then I added the online TradeStation um, trailing stop profit taking algorithm, and that helped. So that gave me some profit, whereas the other one was just taking me in and out with very small profits. So changing the parameters, the length of look back, for example, or the time frame that I'm on in the chart, changing those things, and then automating the other parameters, like the stop on the case of the trailing that you want to use, and letting those optimize. That's what suddenly got me into this green. And but nevertheless, it's kind of polishing the apple to do that. It doesn't actually have that much to do with my contribution or learning something from it. It's as far as I can see, it's actually made my momentum strategy work better than I ever had.
Right.
Automated because I'm not consistent with it. So,
got it. So
I have
this
to
was
learn something really new, except how to run the tools.
right. So this momentum strat, this was something you were doing before, or
Yes.
a new idea? Okay, so you were doing this before. You did the study, and you realized through the study that it didn't really have an edge, or at least not as much as you hoped.
That's right.
Okay, and then you've been adjusting the parameters, optimizing, adding money management to it, and you're seeing, at least right now in theory, how to make it better, how to make it profitable.
Yes.
Okay.
Well, that's got some potential.
Yes, that there now is potential there. Right. So that's good. And you're only in week 1. So what you're going to do is continue on with that. And then just my experience, what market are you using, by the way?
The S&P. I'm trading the ES. I'm trading the futures.
Got it. So there's 2 ways it'll go. Almost, you could say 3, but 2 ways really, maybe something in between. So the better outcome is what you have found works and just does what you have seen and just continues to do that. On the other side, and just it's always good to remember, what's the downside and how will I deal with it, and what's potentially the cause of it. On the downside, something with, especially on money management stuff, that can a little bit overstate results when using trailing stops and break-even stops and these kind of things. So
I didn't slippage in either.
Okay, yeah. So like slippage, you can even study that before you go live. But then trailing stops, things like that, that if the time frame is very short, then those things might drag the results down a little bit.
7 minutes. I'm on
7-minute
bars now.
Yep. So I suspect when you add slippage and and see live data from trailing stops, it won't be as pretty as you're looking at. This isn't a bad thing. It's just a learning process. And I'm guessing, I don't want to burst your bubble and make you stop right now. Like, finish the process. But if it hurts, if it hurts the results to add slippage and see live results as far as how the trailing stop actually works, it's not a problem. You just take that as another cycle, another loop of knowledge, and say, okay, the slippage is hurting it more than I thought it would. So how do we reduce that? We got to increase the average win. Best way to increase the average win is slow the bars down. So that would be the way to do that. Or
you mean go to a longer time frame chart?
Yep. Are you trading overnight also?
No.
Okay.
I'm just trading day session.
Got it. Yep. So that would be one where I would look at removing that, just because there's a lot of smaller movements there that can cause more whipsaw. So yeah, just but first finish the process as you've already done. You've made it, through some of the first hurdles, and new ones will come, and you just keep reiterating and improving it. And also,
you said you wanted us to do 5 such things as the assignment for the first week. So I guess I've done 2 so far.
And it sounds like you've done them fully, where some could do something even simpler, and you've fully optimized. You've gone beyond even what was there, which is very good. And it's momentum, you said, right?
Essentially what I do is I watch the 10, 20, 50, and 200-day moving averages, or bar moving averages, because in this case, they're 7-minute bars, not days.
Right.
But my notion was, can I find a indicator that will show me how strong momentum is, and therefore how long it's likely to persist if I see it reverse? Will it persist in that direction long enough for me to make a profit? Because I really regard the market as being Brownian motion, totally random, and
Right.
and that there's really no such thing as momentum because it can turn on a dime. It has no inertia at all. It'll come up to a point and then absolutely 100% reverse, as you know, at a peak or a bottom
Right.
depending upon who jumps into the market. So, but there are supply and demand levels that we can identify that historically seem to have a bunch of orders waiting there to jump in, which we can potentially fade if it comes up to it. So that's part of my method when I'm trading manually. But the issue about momentum is that I've observed that if I essentially measure the slope and see just what's the direction of the trend, is the slope of two adjacent bars positive or negative? And if it's negative, then ride that because it means the price is going down. Ride that until it reaches a bottom, and that slope suddenly switches positive, which means it's hit the bottom, and then it's time to jump in long. And so that's my current notion. It's kind of like the MACD crossover, and you had a session on the MACD using the MACD indicator, which I guess you put on YouTube, and it's part of your weekly coaching sessions.
Yep. I would describe what you're saying as a buy after the dip strategy.
Yeah.
So some people say buy the dip, which, you know, the catching knives, all these things. But when you've let it drop and you let it start to turn, so that you're trying to catch an earlier part of it, get the meat of the move, but not be the first one in.
That's right. That's
Yep.
right.
Yeah.
And
Well, I would suggest too, look in other markets, look in other stocks, look in high beta names as well. Because sometimes if you build a strategy that works on SPY or ES, this is the way I've always put it. Say the S&P moves on average 8% a year. So it's hard to squeeze out, you know, your cut of that. You could think about all the times it goes down and up and down and up and catch all the small moves, but still, no matter what, it's not generating a lot of percent moves or net percent moves. There's not as much to get, and a lot of people are trying to get it at the same time.
So using the Vanguard total index, for example, as the in market thing in your total our target volatility scheme, which I love now, is a little tame for me. So I want to go to something more aggressive.
Yep. Yeah. And so that's the one where it's like all we're trying to do there is capture most or all of what's available from that, which is not a lot, but greatly reduce volatility. That's the number one goal there. Then with trading, especially day trading, your goal is more growth, you know, outperform, have higher gains with still less relative volatility. So if you were to take that same strategy and start to plug in higher beta names, faster moving names, even ETFs, you may see the results improve quite a bit from that.
So I've also been profiting from your Skip the Dip book.
Awesome, I love that.
Which I got the hard copy of. So yeah, I love it. And the thing that appeals to me most in the short time, I guess I'm in my second month now of being with you, is that you've got kind of a holistic approach towards investing and trading, and the things that I think I need is a way to deal with the risks, because ever since the tech wreck in 2001, and I did well as everybody else did leading up to the tech wreck, and that really took the wind out of my sails. So I was part of the lost decade.
Yeah.
Even though I was still in the market, they were just lying there. Even good stocks were just lying there, left for dead. And so I started getting back in when I retired about 8 years ago, and doing classes and trying more things, more markets. So your total diversity approach, which means do more markets, do more strategies in those markets, do more vehicles and names in those markets, is also, you also show us how to do it with that way you have of sifting or searching for high beta or good movers to trade using the RSI plus or minus 50, above or below the 50 line. I've been doing that, and the other thing you've opened my eyes to, even though I've had TradeStation for 8 years or more, I didn't realize how powerful the portfolio manager was. I didn't portfolio maestro. I didn't even know about it until you pointed it out to me, and the ability of that thing to load it up with a watch list and then run curves on it in a matter of a few minutes is just astonishing. And
Yeah.
And I applied that to all the holdings of the ARK ETFs.
Right.
And there were 36 of them in there. And I could run all 36 of those over the 2020 and see where they went to as individuals and pull out some graphs of them. And so that plus doing manual tests to see how they get in and out, just using that simple RSI indicator shows me what and you gave us this thing called, you call a 350 challenge to find some good stocks good names to put into our trading portfolio, and that is very revealing.
Awesome. I'm glad it's resonating with you. You're able to take concepts, and then we take the steps of how to implement it, and you're seeing the progress that you were aiming for. So,
and the tools
appreciate you sharing that.
Say
it one more time.
The tools that you've given us,
yes,
are really terrific. I mean,
awesome.
As I say, in the case of TradeStation, it's been there as long as I've had it. I just wasn't aware of how to apply it.
Yeah. Awesome. I'm glad you're seeing the results you were hoping to see. And thank you very much for sharing it, because a lot of people are where you were 2 months ago, or 3 months ago, or even 8 years ago, and they're kind of trying to figure out what to do next. So it's good for you to share your progress that's ahead of where they are, to encourage them and keep them moving forward.
Yes, you're getting me unstuck, and you're pulling me out of my hole that I've been in.
Awesome.
Thanks, Liz, for this.
All right. I know you asked me a question in email. I'm going to send you a response to that specifically, but I really enjoy working with you. I'm happy to have you in the community, and anytime, just reach out. Let me know how I can help.
Great. Thanks for the experience.
Thank you. All right. Talk to you later.
Bye.